What is going on, investors? Hopefully, you guys had a great day. It is time to talk about Zoom Video Communications, ticker ZM. Your day would be a lot better if you don't own Zoom because the stock is down about 11%. I'm seeing 9, 10, even 11% in the after hours. We're way up here at about $340 per share on this one. Now we're down here at about $307 per share on Zoom after they reported Q2 earnings. Talk about what that means from a technical perspective here in a minute. I'm not going to waste any of your time. We're going to jump into these numbers here in a second, but first I wanted to point out was the Q3 guidance. So we just printed a quarter over at Zoom where we did over $1 billion worth of revenue, just a shade over $1 billion. Last year we were sitting at 663 million. So phenomenal year over year growth, but I think everybody's expecting, okay, Zoom's massive growth days are probably going to start slowing down. And one evidence of that is, again, we put up a quarter where we did $1 billion in revenue. They're talking about for the third quarter, that is the upcoming quarter, doing almost exactly the same, about $1 billion, a shade over $1 billion. Then they gave us guidance for the full year right at $4 billion. So this company is really projecting itself just kind of flat over flat from a revenue perspective, sitting right there at $1 billion. Now, that's not necessarily that big of a deal because I want to talk about these numbers here. So cost of revenue over at Zoom, this is amazing high margin business. This company only spent $261 million to make this $1 billion worth of revenue. That gives us gross profit of $760 million. This gross profit of $760 million is actually higher than the revenue was this time last year, which was at $663 million. So they're doing a phenomenal job, not only growing these revenues, but obviously the software stack is essentially kind of paid for itself at this point, and they are just printing money over at Zoom. Now, they do have other costs here. Research and development went from 42 up to 82. Don't really mind that, okay? Again, this is like a one product company. This company reminds me a little bit like maybe like Netflix, where they have a great business. It's recurring revenue, those types of things. But at some point, your customer base is going to flatten out and you're going to have to create new products or innovate and iterate on top of the product that you have already. Some of that could be evidence that we increased our research and development fees by $40 million year over year. Sales and marketing went from 159 up to 271. Not a big jump there, okay? So they had some really nice sales growth, and obviously our sales and marketing went up quite a bit, but it's not crazy. And general administrative, also relatively intact. We went from 81 up to 112. Not that big of a jump, okay? So our total operating expenses went from 283 up to this 465. Obviously, they grew with our revenues, but we take this 760, we minus the 465, and we get income from operations sitting right at $295 million. We're sitting at 188. So this company is actually scaling up nicely. We see for the last 6 months, the company has made $500 million. I think you can comfortably annualize this out and say Zoom Video is going from income from operation is going to make $1 billion. Now, one thing that I do want you to keep in mind is we've got just a $101 billion. Yeah, $101 billion valuation. Now, that could be shaved off in the after hours depending on what happens tomorrow. You could be at 90 billion valuation on this one tomorrow. So you're getting it, yes, still an extraordinarily expensive stock. You're looking at 100 times, 90 to 100 times income from operations for this one. But again, you're growing nicely and you are doing it profitably over at Zoom. I think what the thought is, what is next for Zoom? I just want to show you cash flow. So we pull down this net income number here. That is for 3 months. And take a look at the net cash provided by operating activities. $468 million because they're paying their employees primarily with stock-based compensation. So they get to add back in this massive $102 million worth of stock-based compensation. That gives us cash flows of $468. This company is printing cash similar to how a Microsoft prints cash, similar to how a Google, okay, not to that scale, not to that epic proportions, but this is the type of company that we're seeing here. I just did a video on CRM, which is Salesforce.com, they're not printing money as well as Zoom. So here's my story. Here's where I'm going with all this. Okay. We come over to the balance sheet. This company has $2 billion worth of cash. They have another 3.1 in marketable securities. They've got another 400 million in accounts receivables. All added up, this is five and a half, close to $6 billion worth of total current assets. Most of it sitting there in cash. On the liability side, you have some operating leases and some other some deferred revenue. But other than that, there's nothing really sitting here on the liability side. So how is Zoom going to grow? Because we talked about how the guidance for the next 2 quarters is coming in basically flat from a quarter-over-quarter perspective. Unless we get a resurgence of the health situation, which I think maybe if you're a Zoom shareholder, you're kind of hoping for that. But other than that, I don't think anybody is hopeful for that. I still think Zoom is going to hold its place in the workforce. I think the way this company is going to be able to grow is through acquisition. So they're going to actually buy other companies and kind of roll up a software stack. That is potentially how Zoom is going to take things to the next level. Otherwise, I think this stock is going to be stuck in a vicious cycle where it trades up, announces earnings, trades down, announces earnings, trades down, goes up a little bit, announces earnings, comes back down, because the valuation is still at $100 billion on this one. And while still profitable and still a very, very nice business, that is a business that I think you are paying up tremendously for unless they start rolling it up, similar to a Salesforce.com, similar to even like a Microsoft, maybe certainly not to that scale, but companies like that are certainly rolling things up. Now, from a technical perspective, over at Zoom Video, we have created a big gap and we're coming back down here. It looks like to me we want to come all the way back down here from 281. Tell you what, there is some areas of support down here, particularly at this 280, 281, 279 range. That is where the stock bottomed out here and kind of was a resistance here and then kind of a launching pad here. So I'd look for Zoom to continue to walk back things. The momentum is back down. The uptrend, there was a shorter term uptrend in this one. We broke it with earnings. I think the momentum is going to come down. If you don't have any momentum in people going back to work, or going back to work, not returning to the office, those types of things, that could help turn things around a little bit for Zoom Video. Now, if we don't see that, people start going back to the offices, restrictions are loosened or continue to stay loose, well, I think Zoom Video's business is likely to stay about approximately where it's at. Its big growth days are over, and they are going to have to spur growth another way. They have plenty of cash on the balance sheet, and certainly with these types of profits and operating leverage, they could certainly borrow more money or issue more shares to complete acquisitions. So that would be your upside, I think, with Zoom, is that number one, they create some acquisitions and they create a larger enterprise value, and you benefit that way. The other thing is you just watch this thing melt back, and eventually it becomes quote unquote a value stock, and you can get it there. Other than that, I wouldn't necessarily want to be a pure play in this. It's similar to Netflix. Why I like Netflix stock, it's pretty easily predictable. In fact, we broke out just like we talked about on our Friday show, but it is a one-trick pony. And if that trick happens to have any hiccups, we see exactly what we saw happen today with Zoom Video, off over 10% in the after hours over at Zoom. That was Zoom. Hopefully you guys enjoyed this video and you have a great rest of your week. We'll be back with more videos. Good luck with your investments.